Good morning, everyone. We're going to go through the stock market technical analysis. If you're new to the channel, we cover stock market technical analysis. It's really about trade ideas and finding areas where we can make money within the market, using the charts to be our guide. So that's what this channel's about. Leave me a thumbs up, guys, if you find some value. Let's get into it. We're going to start out with the tech sector triple Qs. So in yesterday's video, I talked about where I was looking for sell signals to occur in the tech sector, and also the fact that I thought we were going to get some sell signals pretty soon, given the negative divergences that we had established in tech. Towards the end of the day, we did get that sell signal yesterday in the triple Qs. I did take the short, and so far it's working out very nicely. So I want to point out the key levels to watch. I'll go back to kind of reiterate what we covered yesterday. So on the daily chart here in the triple Qs, there's this uptrend line. We've been in this kind of this upward channel. We recently put in this new high right here, and this was a new all-time high, and yet this was negative divergence, meaning we have a new higher high in price right there from the former high, and yet the momentum, see how it's dropping off, and we have a lower high in momentum on the RSI and on the PPO. It's right there. If you're unfamiliar with these concepts, take my stock market technical analysis course, link in the description below. It's not free. I charge $99 for it, but it has about 4 to 5 hours of video training that goes through all these concepts: risk reward management, chart analysis, all kinds of different things. It's really a well-balanced technical analysis course. Okay, so link in the description below on that one. So there's your negative divergence, and I talked about my sell signal being on a break of this trend line. So going to the hourly chart on Qs, marked in blue here, and I've got the moving averages kind of coming up. But there's your trend line, and I was looking for that break. And yesterday, into the close, basically, they sold this thing down and broke. So that's a sell signal, although it's at the end of the day, which is not usually the best area to see a breakdown. Still was a breakdown, and so the technicals took over from there. We've got some support. It looks like we're starting to hold some support. I marked it out. It's about 394.20-ish, right in there. We had this breakout candle, held it a little bit right in here, and we're coming down to that. So right now, I'm looking, for continued downside. I'm looking for a break of that level. So what I did, and this is active trader stuff, but I shorted yesterday into the close. And I covered that short this morning, basically as we were hitting this 394.20, right around 394.20-ish level. I covered, and I actually flipped long on about a half-size position for a little bounce, but I'm neutral right now. I don't have a short and I don't have a long. What I'm looking for is to re-short it on a break of this level right here. All right, we get an impulsive breakdown and we start to continue breaking. We break. If that happens, I think we're heading down to next level of support, and I just want to point it out now, 382, it's about 382.80. That was kind of a former area of resistance back here, and if I go to the daily chart, you'll see it right there. So that's kind of your former area of resistance. I think that's going to be your first level of support. So I do anticipate that we're going to actually get down there. But again, I want to see a break of that level before we continue to the downside, because we could bounce here. We could bounce, run up, do a back test of that trend line that we just broke, and then continue down. I don't know what's going to happen. So I just wait for the charts to tell me what's going to happen, and then we'll take a position on it. So right now I'm looking for a break of that level to continue shorting. All right, moving on to the SPY. Oh, and also we want to look at the futures as well. Let's look at the NASDAQ futures. It's important to kind of keep an eye on all of them. So here's the NASDAQ futures NQ. And again, there's this corresponding trend line that matches up with triple Qs. Right here, you can see there's your negative divergence. See how we're just trending down right there on the RSI and the PPO, and yet price continued to trickle up. So there's your divergence, your divergent high, and right after that divergent high, we got a pretty impulsive selling. You can see these candles are definitely some of the more impulsive candles we've seen. Breaking that trend line right there into the close yesterday for your sell signal. So if you took that sell signal, you're profitable, and I think we're going lower. So things to watch on that one. Let's go over to the SPY. Again, SPY broke as well. So that's another check mark for this bearish case, is the fact that you not only have the tech sector breaking, you also have just the S&P 500 breaking. which makes sense because this is still pretty heavily weighted with the FANG stocks. But there's your uptrend line right there. Negative divergence has been building for a while. I've got it kind of marked out right there, and I can mark it out on the kind of the most recent divergence right there on the RSI. So there's your last divergent high, and there's your sell signal. There's your break of trend line. See all the tags, reactions that we had: 1, 2, kind of, 3, and break. So as of right now, we're on a sell signal, which means that you want to sell the rips, essentially. So if you get a bounce into resistance, that's where you want to go short. And again, everything's just my opinion, but that's where you want to go short, and then we head lower. Where do we go? Well, on the daily chart, I've got that marked out, kind of the corresponding level, 454.01. All right, so that's a near-term target. I think that likely if you see the SPY and the Qs heading down towards that, we're probably going to get a bounce down there, but I do think we're heading down there, so that's what I'd be looking for. Also, here's the small caps IWM. So we have not held that support zone like you would expect. So this is the big sideways range that the IWM has been in for really for almost the entire year of 2021. And you can see we've held this resistance, this range. Well, we had a breakout right there. So there's your breakout. But again, and a lot of people had talked to me like, why am I still bearish? There's breakouts in the IWM and there's breakouts in FANG stocks and things like that. But we've also have negative divergence. So typically when you get a breakout that occurs on negative divergence, see this IWM, see how we're just downtrending? This breakout right here in price came with lower momentum than before. So negative divergence often fails, meaning they're false breakouts. And so it doesn't have to be a false breakout, but what I was looking for as we came down to this level here at about, it was really kind of a range, but we'll say 233.50 and right in there. This is where the buyers should have been at. This is where the dip buyers should have stepped in and bought, because if it was a breakout, there's your support, and then, you should have gone up. That didn't happen. We've continued lower. So if it's not super impulsive, but we're still, you can see we basically broke down and we're still heading lower. So we're back within that range. So I think at this point, when the Qs picks up selling again, which I am anticipating that, I think IWM is actually going to head down to the bottom of the range, 208.81. So that would be, from where we're at right now, a move of about 10%. So that's what I'm looking for on that one. And let's take a look at these FANG stocks. So here's Apple. Again, you want to watch Apple. It's just such a large cap stock. It just has a huge weighting in a lot of these indexes. So right now, as far as I can tell, we've got this price channel, and I've got it marked in blue. Here's the highs. So we got, one tag there, one there, and then here's the low, and it's just this big upward range basically. Well, recently you can see we popped it. So there's your breakout. But that breakout did come with negative divergence. See it right there? See how we basically broke out but lower momentum? All right, so that's negative divergence. And sure enough, you can see that breakout so far has failed. See that big reversal? And this is also a reversal candle right here. It's a doji candle. I don't remember what they call it, but this is a doji candle, which basically is a potential reversal candle. Again, I teach candlestick analysis in my course, so you guys can check that out too. But there's a doji candle. That's a reversal candle, meaning that this thing started to break out, and then the seller stepped in and smashed it back down. So there was a big reversal of trend and momentum intraday on this day. And we're getting follow through today, meaning more selling. Now, it's not super impulsive, but there is more selling. So as of right now, I can see this as a confirmation that we just hit a near-term high in Apple, and we're likely going to trade lower. Where do we go? Well, first level of kind of support, I think, is right in here, about 151.24. And then bottom of the range, though, I think is a very likely target, which would be, right now, it's this trend line, about 140 or whatever. So we'll watch that. That's Apple. Microsoft, I've got to probably go back to the drawing board on some of my trend lines near term. I've got this longer term trend line, this uptrend line way down here, and that sits about 262, depending on when we get there. That's a potential trend line or a target on a kind of swing trade down. And Amazon's right at this support zone. So you can see here, big sideways range on Amazon. We broke out once, that failed, broke out twice. And so far, we're still holding. We're right there at support. Let me get rid of these circles here. We're at support right there at 3550. So, you know, if you can hold, then that's bullish. And if it breaks down, then that's bearish. And if it breaks down, I think we're likely going down to the bottom of the range, down to 2950. But we got to wait to see what that one's going to do. The other thing I think it's important to note is that this weekend or this week is a shortened week, and there's a lot of institutional traders that aren't at their trading desk. So take this week with a grain of salt. You know, next week would be a little more telling in terms of where the market really wants to go. Gold. All right, so gold is, you know, selling off. I've noticed that they like to smash gold in the pre-market and overnight. Not seeing the buyer step in so far today. So things to watch. Now I do think we're going to hold the 1790 level by the end of the day. I think we're going to rally up and pretty much close around 1790. That's major support on the bigger time frame. If you go to the weekly chart here, you'll see here 1790 was major resistance back in 2011, 2013 time frame. 1, 2, 3 tags of that, and boom. So it's a key level is the takeaway. And as I zoom in, we've been chopping through it recently. It's just been really volatile where we basically just break down, recover, break down, recover. It's really volatile, but we're right near that level right now, just a hair off of that. So I think we're going to hold, but we don't have to. You know, again, we have chopped down through this a bunch. So if we're going to go lower, then I would look for 17, you know, this 1760 area as right there. Major level of support right there is right now about 1756. So anything below that, we start to do some damage or put into question the longer term bull market in gold. All right, so things to watch for on that. Miners, here's GDX. The miners are selling down into support. Let me go to the daily chart here. So you can see here, this is the potential trend line, upward trend line. And we got the lows here. We got one tag of it here. And we're basically right at the area where the buyers should be stepping in. Right in here. A little bit of intraday, you know, price action where we're kind of undercutting it. I think we're likely going to rally into the close. And this will be kind of an intraday false breakdown. And we're going to hold this area of support and rally off of this. But we got to wait for it and see what we're going to get out of the day. But it is a potential area of support. And just to note, I mean, there's no negative divergence. So that's why I think we're going to continue higher. You'll see here just recently, see the momentum? See how it's trending up like that? And price is moving up. So we have bullish momentum, bullish price action. So I don't see any indication that we're going to get a trend reversal or this is all that there is in this rally. Usually when a rally runs out of steam, you start to see negative divergences start to build. So I think we're likely going to hold and continue in the uptrend. And that's my take on it. Let's go through some of these long trades I pointed out. Here's BHP. These three that I talked about the other day are all rallying pretty nicely. BHP up 4%. And we do have a breakout. It's not the most believable breakout. So I want to point this out. On BHP, you have, to me, what looks like a symmetrical triangle, meaning that's a pattern right here that could, it doesn't really give you an indication of which way it's going to break. It could break up, could break down. Looks like we're breaking up. And maybe we're going to come in for a back test. I don't know. So things to look for there. But so far, we do have a breakout. Now, the pattern's not that well formed. On the hourly chart, you can see we only had 1 and 2 tags of that upper trend line to form that pattern. So not the best formed pattern, but something to look for on there. The other thing that I point out on the daily chart, big bullish divergence right there. See it? Upward momentum's just moving higher while price was moving lower right here. So that was your last divergent low, and we're breaking to the upside. So in general, it's a bullish chart breaking up. Talked about this, and that's why I pointed it out the other day as a long. Rio has a bullish falling wedge. We're at resistance right here, so not an area I'd want to go long, but I'd be looking for that breakout because of the bullish divergence. See the momentum? See how we're moving higher in the momentum right there? See how it's trending higher? meaning that price would continue to drift lower, but momentum kept making higher lows, uptrending. That's an indication that we're about to reverse, or reversal's likely. So you got to wait for that buy signal, which is going to come on a break of this trend line as far as I can tell. Right now it's about 63.80, a breakout. And you want to see not just a tick above it, you want to see an impulsive breakout. You want to see it start to, if you're going to take it intraday, you should see a flood of buyers and really impulsive action as it starts to roll up. Vale continuing, higher. We had that brief undercut here, but we had this brief undercut of this trend line marked in blue. If I roll out, it's all the way back to 2016. There it is. So you've got, the trend was kind of started. There's the lows. There's a tag. Now, only 2 tags, but I think we got a third reaction now. So this is really the key trend to watch, I think, at this point. We undercut it briefly and recovered, and that undercut came with big bullish divergence. So that's why it was likely going to be a false breakdown. And so far it's proven to be a false breakdown when we're rallying higher. So looks good. KHC, another false breakdown. Big sideways range right here. The bottom of the range is about 35.38. Top of the range, 37.83. We gapped down the other day and kind of did some big flush out move, undercutting all that, running a bunch of stops. But again, I talked about that, saying I think this is a buying opportunity because we have bullish divergence. Again, these divergences coupled with the chart and candlestick analysis gives you a good look at the charts, and it's all about probabilities. Nothing's guaranteed. A lot of people say, oh, the divergences don't work. No, they're not an end all be all. Just because you have divergence doesn't mean short or go long. It's just part of the analysis that sets you up. It's part of the setup. And then sure enough, recovered, and this thing's up, 1.5% today. But the point is, this was a buying opportunity down here. This is where I added to the position, and so far we're recovering. So I think we're heading to the top of the range, and I'm 37.80. And then if you get the break at the top of the range, then I'd say it's a higher probability at that point that we run up in gap fill at 47.91. All right, so I still like that long. And here's a short trade I've talked about a while ago. I haven't really been following up on it. GNRC. So again, this one, you've got a trend line coming off March 2020 lows. See all the tags of support I have. I have circled. We broke here. That was a sell signal, and then they did this counter trend bounce. I'm seeing a lot of that in the market. So you have to be prepared to either ride that out, or one way to mitigate, or handle this trade is maybe take a half position on the initial sell signal and then add the other half on a back test. We get a lot of back tests because this is a buy the dip market, just given the nature that you've got a lot of traders in the market who only know to buy the dip because they've never experienced a bear market. So they're going to continue to do that until it doesn't work. Doesn't mean that a bear market hasn't started now. Doesn't mean anything. It just means that there's a big cohort of traders that will just buy the dip until they're proven wrong. So that's what you got here. You get the buy the dip, run up, recover, but then you get another breakdown. So as far as I can tell, this is heading all the way down to 385.43 as the next level of major support. So that's where I'd look for somewhat of a bounce. We break below that, we should head down to 347. It's about 340. All right, so I still like that. You can see, a little bit of chop around the moving averages here, but I think we're heading lower and continuing down. XLF. So right now, I think we're seeing a little bit of a transition from tech into value, basically, and the banks and the financials are kind of a key value play. Looks like that's what we got going on. So here's the March 2020 lows on the XLF, which is the financial sector ETF. You can see, held support here. There's the low. Had another tag right there, kind of one right there. And then recently we broke down. We did have a breakdown, but the very next day, there was no fall through. The very next day, they snapped it right back above that trend line. So that's a false breakdown or a bear trap right there. So that's what we're seeing. We're seeing rallying into the tech sector. Now, we do have negative divergence, been building for a while. So any kind of breakdown again, I think that's going to be the real deal on XLF. Otherwise, just look for this to continue to rally. We're above trendline support, So that's all I see. But again, any kind of breakdown, likely going to be the real deal. Likely going to see more impulsive selling in the market at that point. Someone wanted me to take a look at some stocks. Here's Trip. The main thing that I'm noticing on Trip, big gap right here. Pretty obvious gap. And should roll that out. That's probably where Trip's headed. I'd probably go right above just to cover it. So I would be looking at Trip to probably trade all the way down to this level, which is about 21.14. We do not really have any bullish divergence on the RS. Well, we have some. It's there. It's not confirmed. So there's a little bit of bullish divergence on the RSI and slightly there on the PPO. But again, these are pointed straight down, most of them. So any a little bit lower, and we'll just burn through that divergence. So that's what I'd be looking for, levels to watch. And Tesla. All right, so Tesla here. On the daily chart, here's your trend line. Let me try to pull that up. There it is that I've been watching. So 1, 2, 3, 4, 5, 6 tags of that as we held support. We broke, had a sell signal, pretty clean sell signal right there. But then again, this one, especially this one, being kind of a cult stock, the dip buyers are just, they're going to step in. You just have to expect that on Tesla. And so they stepped in, bought it, bid it all the way back up, recovered this trend line briefly, and then the sellers are back up in here. So you can see a big breakdown candle, run up, back test again right there, and failing. So I think we're going to fail here. This is likely where this is resistance. This is likely where the Tesla's going to start to downtrend, and maybe we're putting in a head and shoulders over the long term. I don't exactly know, but perhaps there's a shoulder ahead and we'll come down and then build another shoulder and then break down. But again, I think in the short term, I think this looks like the area where we're likely going to get rejected. So things to watch for on that one. First, we've got some gaps along the way. It looks like there's some support right. I'll have to go to the hourly for that. Looks like there's there's a gap right here. So I think that's likely an area. And I would look for this to probably bounce a little bit above the gap, but maybe an area right there at about 9.11. All right, and if you're shorting from up here, maybe you want to cover a little bit ahead of that before the dip buyers step in. Okay, that's all I got, guys. So thank you. Leave me a thumbs up on your way out. I do appreciate it. Catch you on the next one.